This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending July 18th, 2020. The market does three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was up. The Dow Jones Industrial Average was down on Friday by 0.23%, but it increased by 2.29% for the week, marking the third week in a row of gains along with the S&P 500, which gained 1.25% for the week. The Nasdaq, however, lost minus 1.08% for the week. Each major index had 3 up and 2 down days. The Dow Jones Industrial Average was down on Thursday and Friday. The S&P 500 was down on Monday and Thursday, as was the Nasdaq. No, all indices were down on Thursday, mostly attributed to the increase in the unemployment numbers, 1.3 million new claims versus 1.25 million new claims expected. And Netflix earnings came in lower than expected. In addition, Tesla finally pulled back on Monday, causing the Nasdaq to fall. New unemployment claims versus expectations, company reported earnings, new clinical treatments, virus vaccine developments are all news. The market moves on news, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. That is, they go up and down, but with an upward drift. While I can't predict what the market is going to do on a daily basis, I do feel fairly confident that the market will continue to go up because the powers that be want the market to go up. And one of those powers is big banks and other institutional financial firms like hedge funds and mutual fund companies. The financial industry is full of billionaires and millionaires. Their wealth is derived from the stock market. They will use their influence to make the market go up. The stock market, though, has almost no meaning to your average worker, especially gig economy workers. Most workers do not own stocks. Are you a worker? Do you own stocks? If not, why not? For those of us who do invest and or trade in the U.S. stock market, what should we do when the market does go down? Buy more? Sell? Or just hold on? Or should we start shorting the market, and that is trade so that we profit as the market goes down? I don't know if the market is going to go down. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. There are many market purists who criticize Wall Street market manipulators and bemoan what's happening in this juiced up market. There are others who are warning of economic doom and a stock market collapse. The market will fall. In fact, it did fall at the beginning of the pandemic. However, it has recovered almost all of its losses in 4 months. And the Nasdaq has been hitting new historic highs. So I simply try to take advantage of the market as it is. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside Trading Strategy. The Southside Trading Strategy is to generate cash flow by primarily selling weekly put options on 3 growth stocks, labeling them Position A, Position B, and Position C stocks. I dedicate a certain amount of money to each position. I try not to exceed the designated amount of money for each position from week to week. I allow put options to expire when out of the money at expiration, and I allow put options to be exercised when expiring in the money. I also sell weekly call options on any owned stock as a result of stock that I've purchased. Optionally, I sell weekly put options on dividend paying stocks instead of growth stocks, especially when the price of growth stocks are not favorable. I also look to trade gold and silver ETFs and their options to take advantage of the vast illegal manipulation of the precious metals market. Here are the stocks on one of my watch lists from the week ending July 18th, 2020. I do not identify which of these stocks I own because I do not want anyone to copy my trades. Besides, I trade week by week. Which stocks I trade changes every week. I have about 20 different watch lists for various purposes, but this is my trading watch list. I trade at least 3 of the stocks on this list every week. Which ones do you think I traded this week? Take a look at mRNA in the first column. I have traded it in the past. The stock has been on a tear recently. You can see that it went up $13.04 on Friday. That's almost 16% in one day. And it is up 51.49% for the week. Well, unfortunately, I missed that gain. I did not have a position on it. One drawback of the Southside trading strategy is that I may miss gains on stocks that suddenly take off. The Southside strategy involves trading for weekly cash flow, that is, trading for income. Selling puts and calls generates cash flow. I receive money as soon as my sale is made. I usually do not own stocks long enough to participate in much stock appreciation, nor do I own stocks long enough to suffer a lot of deep stock price declines. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index SPY? Let me know in the comments section. Are you willing to share your strategy? As of July 18th, 2020, my portfolio is outperforming the S&P 500 Index ETF SPY. Year to date, my portfolio is up 12.43% versus 5.72% for SPY, a difference of 6.71%. I am beating the S&P 500 by 6.71%. This week, equities, including puts, calls, and ETFs, make up 40.84% of the portfolio. Cash makes up 59.16%. The cash flow generated for the week was 1.89% of the portfolio account value. The account value increased by 1.73%. Meanwhile, The S&P 500 ETF SPY increased by 1.30% this week. I sold option contracts on 7 different positions during the week, 4 calls and 3 puts that range from $158.35 to $762.99. The Southside Strategy was developed over time, only after gaining foundational knowledge through experience and study. The Southside School of Financial Freedom promotes using the U.S. financial system to gain your financial freedom. In order to do that, you must read, save, and invest. RSI, read, save, invest. I share my strategy for free because I want to motivate ADOS to start thinking about the stock market and learn as much as they can about generating income from the U.S. financial system. There are as many trading strategies as there are traders because even when people use the same strategy, their results will differ. They differ because of timing, application, and risk tolerance. I want you to learn how to develop your own trading strategy and develop your own watch list. Please use the Southsides as an example of what to do or of what not to do. Ultimately, if the Southside trading strategy proves not to beat the S&P 500 index, then you know what not to do. The Southside School of Financial Freedom is open to your questions and critique. Please comment below. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn how to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing can free you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading system that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales, How a Small Fish Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please share, like, subscribe, and have a good day.